Hello and welcome to Business Today Television. I'm Siddharth Zarabi, live here from the World Economic Forum at Davos, and with me, Amitabh Chaudhry, the MD and CEO of Axis Bank. Welcome to the studio, Amitabh. And before we get into matters banking, how's the Davos experience been so far?
No, it's been excellent. I've been here for a day now, and it's always a pleasure to come back to this beautiful town and obviously get to meet a lot of people who you always promised to meet, was not able to connect with for the last 1 year. So, great opportunity to connect with not only foreign investors looking to invest in India, foreign companies looking to do the same, but also meet your Indian colleagues who all come here together and project India in a certain way. So, yes, delighted to be here.
Does India still need to be projected? Because many participants here would say that we've completely arrived and it's a done deal.
We have arrived, but I think there's still a gap between arrival and ensuring that the investors do come in, they invest large amounts of money, continue to invest in money and buy and make it a more credible India rather than incredible India. I think credibility is there. I think this is a process. This is not a one-time event. So in that process, we have to establish and reiterate and reassure what India is all about on a continuing basis. So, and that's why you have a pretty large ministerial delegation here also. I think they realize the importance and the benefit they can get just because India is here on a consistent basis, drumming it up. Nothing wrong with that.
Absolutely, and a great line there. Credible India, not just incredible India. And one part of that credibility is regarding the sector that you work in, banking. And we've seen a shift. And in an earlier conversation, somebody made that point that Indian banks now a cyclical turnaround, mostly including the public sector back. You know what happened last year, and that is feeding into many sectors of the economy, infrastructure, which had become a pain point. So, from an overall banking system perspective, how does 2024 look like?
So I think the banking system, as you just pointed out, is going through a Goldilocks period. The banks have completely cleaned up their balance sheet. They are well capitalized. The corporates are deleveraged. The retail sector is growing quite well. Generally the credit quality is quite strong. The consumer sentiment is quite strong. India GDP growth rate is looking good. As you said, India has arrived. So in that sense, everything seems to be pointing in the right direction. And at the same time, let's be cognizant of the fact that the regulator is indicating that there is maybe some signs of exuberance. Maybe the unsecured loans are way higher than where they want it to be. The interest rates are not coming down. Frankly, with the increasing the risk weighting on the certain categories of loans, they have increased the interest rates for those loan categories. So the regulator is saying that interest rates are going to remain here or remain high for certain longer period of time. And finally, which I keep saying repeatedly, that these are good times. Banks, we are in the risk-taking business. We make mistakes during these times. In the bad times, we completely hatch it down. So we have to ask ourselves continuously this question that are we making any mistake, and what are the mistakes we're making, and what are we doing about mitigating those? Now we are lucky; we have a great proactive regulator who's keeping a check on maybe some of the exuberance, but every bank's context is different. Every bank has its own issues and risks which they take. I think every bank should be asking, every institution should be asking itself that question. We are. So we are watching all kinds of matrices. We're not seeing any sign of worry at this stage. But as this period keeps progressing, I think we have to worry a little bit more.
Uh, do you think you have made mistakes, or are you telling us that as far as your bank is concerned, you've been very
No,
cautious?
I think there is no indicator at this point in time that there are mistakes being made. But I'm just saying that it is in good times we do make mistakes. I mean, that's a lesson we should learn from history. So we should be asking ourselves the question, are we going wrong anywhere? And invariably it doesn't happen one shot. Your line in the sand in terms of your credit standards, underwriting standards, the customers you deal with keeps shifting over a period of time. So you don't even realize that you've come a long way.
Absolutely.
And that's what we should be watching for.
Absolutely. And on your earlier point about exuberance, what was that on account, or what is that on account of? Is it just demand, or is it a newer class of intermediaries who, in their effort to grow businesses, went out and kind of just sort of overdid it?
So it's a combination of, I think, all these factors. One is that, yes, maybe there are some lenders out there who, for establishing a certain growth path, are, I think, maybe doing more than what is necessary or taking risks they should not be taking. That is one part of it. Second part of it is that, yes, I think in some cases we are catering to customer segments or are willing to live with a leverage which we're not in the past. So that's the second category. And third is that yes, the retail loan growth rate has been much higher than the wholesale side. The wholesale side has been muted a little bit. And there, as you try to expand your franchise, sometimes it does happen that you again go into markets you don't understand, go into asset classes you don't understand fully, and tend to make mistakes. So it's a combination of that. I think RBI is worried about unsecured loan growth. It is worried about the customer contract issues in some areas. Do the customers will understand what kind of product they're buying and service they're signing up for? So I think they're pushing that agenda quite a bit, and I think the banks are also responding to it. And I think we'll continue to respond to it because ultimately it's good for the system and good for our customers. I mean, if we're doing the right thing upfront, it's good for us.
Let's step back on a broader basis. Government capex has been doing the heavy lifting for years. What's your sense of private capex again 2024 and in particular the corporate loan book?
So right now, I would say the sentiment on the private capex is definitely turning around. I think you had a post-COVID period and some of the global turmoil which made private players pause a little bit. I think with some of that settling on, it's not that the global turmoil has gone away, it has only gone up, but I think the acceptability of the risk around that is, I think, more than before. Secondly, India's GDP growth rate is picking up. Third, they realize that India has played its cards quite well in this changing geopolitical scenario. So I think the comfort level is growing. Capacity utilizations have gone to a point where you need to spend money to increase your capacity. So all these are adding up to the private sector players saying that, okay, we are going to invest. If you just take, say, for example, Vibrant Gujarat as an example, okay, commitments only are made. It's not a confirmed or, a capex which will necessarily come through. But if you just read through, some of the numbers which are being mentioned, I think they're much larger than what they're mentioned in the past.
Okay.
So if you just take that as a trend line, I think that's a positive trend line.
Within this, what are the sectors do you think are going to do some of the heavy lifting this year?
So I think on the dwelling side, you're seeing a lot of investment. So real estate is picking up after a long period of time, and real estate tends to impact a number of other sectors of the economy. The consumption side continues to do
and
well.
It's always cyclical, and I think now
the cycle is picking up.
Yeah.
Or you're seeing a lot on the consumer spend side. So and the consumer spend side, which has been muted on the rural, we are seeing some signs of it kind of coming back to some extent. I think what government is doing on the PLS side and what impact could have overall on manufacturing is good. I think India is seeing for the first time emergence of high-end technology in the startup system. So that is also going to feed in the economy in a good way. And hopefully ecosystems will get created around certain industries. Some of the commodity side things continue to play up quite well. So it could be steel or it could be things of that nature. So that is also helping the overall private capex pick up. I think in almost every large industry, you are seeing emergence of 4 or 5 large players. So you saw consolidation happen over the last 3-4 years in almost every sector. I think now the time has come to start actually spending money for further capacity expansion. Earlier, you were getting it by just rolling in players in. Now I think real capacity expansion.
Absolutely. And how crucial a role will our interest rate scenario continue to play? And we are already hearing some talk about what will happen in the US, for example. I heard someone say 150 basis points perhaps towards the end of the year. What's your sense of the India situation?
So first is that RBI's very important mandate is to bring inflation to 4% with a 2% price band. That has not happened as yet. And that's why
Will 4% ever happen, Amitabh?
Well,
should we even chase that? I mean, I'm not asking you to question policy, but your own sense as a banker.
I think RBI said it very clearly that that's an important mandate they have and they do want to get close to it. That means that they have to keep liquidity tight. That means that they will keep interest rates higher for slightly longer.
Shouldn't the mandate be changed?
Well, the economic growth is not getting impacted in spite of these rates, right? So if, let's say, the economic growth is getting impacted, you could say that, it is actually coming in the way of something positive.
So, sadak khali hai, speed nahi badha sakte. That's why.
No, I think, but you increase the speed too quickly, then all the goodwill that has happened also, kind of, you have a crash, which is an unexpected crash. So I think they're trying to balance all of this, I would say, quite beautifully. Let's see, only the time will tell. We were expecting interest rate cuts to start happening earlier. Now we're saying 1 year later. If you look at the Fed's fund story, rates going up, down, there's been a saga where no one has been able to predict anything whatsoever. So in my mind, I think the regulator knows what they're doing. I think the signals they're giving to the market are quite clear, as long as you read what they're saying. But I do expect the interest
rates... And read between the lines as well.
And the interest rates will, I think, remain here for some time. I believe for this year. And then maybe we'll start seeing some cuts beyond that.
Okay, so interest rates to remain elevated for this year and maybe after that. So what Amitabh Chaudhry is saying, 2025, and Just wanted to get that right. Okay, let's talk about a broader thing, because we are at Davos, and the whole bit about who will fund the India growth story. Massive targets there, 7 trillion by 2030. What sort of role will our banking and financial system, and what kind of role are they expected to play to achieve that kind of target?
So to support a growth of this nature, the banks obviously have to step up. And it's not only banks, there are other institutions also to step up, because people need different kinds of financing over a period of time. You might need a project financing, which the banks might not be willing to do, and you need a different platform for that. You might need to go to banks, at some stage of a life cycle, and as you grow as a company, and you might need to approach equity markets or REITs or whatever that might be to, ensure that you're tapping into each of the possible markets, debt markets out there. I believe that Indian banks do have the capacity and the balance sheet to support that growth. We can't fund everything. And people who want project-like financing, as I said, might need to approach different platforms. But I think the banks can pretty much support the growth which the Indian corporate world or the government expects from them. I don't see that as coming in the way. You look at the commentary over the last 2 years. Private capex is not picking up because banks are not willing to support them. They're not picking up because they're not willing to invest. So I think this will continue. If private capex or the need for debt was there, I think the banks would have the capacity to step up. And frankly, if more capital is needed, I'm sure Indian banks can raise more capital to support that growth.
What would you say to those who would say that they have perhaps heard similar kind of statements before the NPA boom, the NPA problem that happened? Because at that time also our banks had to do the heavy lifting and do the role of what was envisaged for development finance institutions, for example. Are there any concerns this time?
Well, we have come a long way since then. I think the understanding, appreciation for what NPLs can do to you, the whole bankruptcy code which has come through, the fact that the pace at which information is being shared between various banks, the fact that entrepreneurs now know not only the business can be taken away from them, but they can be behind bars for frauds. There's so many things which have changed in the last 5 to 7 years. I think banks are in a much more powerful position to recover their debt than they were before. And now, given the way the governance system has also emerged in the country, you cannot manage things anymore.
And governance system, particularly for public sector banks as well.
Absolutely right. So there's no question of call coming from here and there. I mean, ultimately, everyone has to do their things the right way. And the right way, if it means that I have to recover the money, or I have to recover the money a particular way, and I have to go for the best solution, it will happen. No one can come in the way. So I think there is a huge change, a significant change. So yes, banks are exuberant, they lend, they did a lot of project lending at that time, they have learned the lessons. Will the same thing get repeated? I'm doubtful. Will some banks make mistakes? 100%.
I've just received recently an email to Citi card customers, and I am now an Axis customer, and I'm sure there are several thousand of those, not a very big number, but for those who might be Citi card users, what's the outlook for them that you can share?
So firstly, the 25 lakh plus customers, a very, very large number. The reason we paid such a high price for this business is because this franchise has been around for 120 years. The quality of the customer franchise they have is something something to aspire for, and that's why we went and brought that franchise. And Axis Bank will do everything at its command.
And everybody stayed on?
Most of them stayed on. I mean, a very, very large majority have stayed on, because please understand that we went through a consent process anyway. So the customers consented to come onto the Axis franchise. After that, the leakage has been very, very small. It is very, very important for us to provide the best possible experience to the Citibank customers. We are trying to make it as seamless as possible. So when the technology shifts from Citi to Axis, we'll try to ensure that the amount of work or the migration is so seamless that people don't even realize that they're now working off Axis technology. Obviously, our technology, if you look at it in comparison to Citi in India, is definitely better. For example, a mobile app is rated 4.8. Comparative Citibank rating was 4.4. So I think when people experience Axis technology, they will realize that they've come in a good home. That home, is not only welcoming them, but wants to grow with them. And we will go out our way to ensure that the journey to Axis Bank systems is as seamless as it has been for the last, 12 months or so. And we intend to continue as we move forward.
And how long will it take for the entire migration to be complete?
Sometime in middle of this year. Sometime middle of this calendar year, we'll be shifting to that technology.
Okay. Final question. and because I had received this New Year message to those card customers, but what's your message to your employees, to your core team, with regard to what kind of targets you have in mind for them, including margins? What is the outlook there?
Well, I think we have now created a platform which can win in any business, win any customer they want against any franchise. It's a question of being in front of the customer at the right time with the right solution, continuously, on all the time at the right time. I think the belief has definitely entered the bloodstream of every Axis employee, and I'm quite proud of it. Obviously, we have targets, but I think the most important thing we have to aspire for is that we can take this franchise to the next level, and that's the ambition I want each Axis employee to have. It will take time for us to get there, but as long as every Axis employee can carry that notion inside them and that belief inside them, we will win.
And will banking be won by technology? Because it's very clear now that as far as the customer is concerned, he could be a very big one or a very small one. Technology is now the differentiator, and that's where it's separating the big boys from the small boys.
So, well, technology is a very important component, and Axis Bank was one of the first banks to announce a digital banking unit 5 years back. It's about 2,400 strong now. So,
Wow.
so we really expanded the size of what we have. And I also mentioned to you that how technology from the quality from mobile apps, so the platforms we created, we are best in class. So, technology can be a differentiator, will be a differentiator, but it requires continuous investment. It requires a vision. It requires not just an immediate thing which you have to do, but a vision about what the customer experience, what the customer journeys, what the customer itself could look like over the next 3 to 5 years, and you have to work on all of them to make it all come together beautifully for the customer. So I think Axis Bank has come a long way, and that'll be a very, very important driver of our differentiation going forward.
Amitabh Chaudhry, I wish
Thank
you
you.
all the very best
Thank
for
you, thank
that
you.
work from this very beautiful
Absolutely.
backdrop, the sun's setting and the temperatures falling. But that was a fantastic conversation with Amitabh Chaudhry. If you've been, thank you very much for watching.